Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. And joining me is my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewiton. Emily Parker is off. Good morning, Lawrence.
Hey, good morning, Christine. Welcome back. Thank you for coming back. It was
always a pleasure.
Scary
always
doing it by myself. Absolutely scary yesterday.
You did a great job, I hear, though. So thank you very much for that, Lawrence. Let's check in on Bitcoin. The CoinDesk Bitcoin price XVX index is currently trading at $48,651. Bitcoin is trading pretty flat over the past 24 hours. And the CoinDesk Ether price ETX index is at $3,954. ETH slightly down about 0.3%. The DFX CoinDesk's DeFi index is at 466 points. DeFi is going soaring.
Bananas
almost 16% over the past year.
Yesterday it was like 11%. I mean, it's just been, the entire market's just been like, falling asleep. I don't know. I think everyone's just sort of like,
what's going on? Everyone's going into DeFi.
Yeah, they were winding down for Festivus, I think, and today is of course the Festivus holiday, feats of strength,
Happy
everything's
Festivus.
going on. It's never a happy holiday; it just happens. But it's a sort of a thing where you do see this, particularly the DeFi index is very heavily weighted with Uniswap. Uniswap's a big factor in it, and you have all these other ones. But you're seeing this sort of like excitement in DeFi as ETH and Bitcoin and some of the others are just kind of like laying low. I think people are just not as enthused.
Well, I'm just seeing mixed numbers right now. Terra is also taking a bit of a dive. Actually, it's not doing. Earlier it was down about 6%. Now it's down just 3%. So it seems what is up with this mix up?
I'm not that concerned with Terra.
All right. And another story we're tracking is Twitter founder and Block CEO Jack Dorsey. He's on an unfollowing spree with the likes of some of the most well-known players in the crypto space, including Andreessen Horowitz, co-founder Mark Andreessen, Coinbase CEO Brian Armstrong, as well as Gemini founder Tyler Winklevoss.
I think Andreessen
later blocked
Jack.
Dorsey on Twitter. Right there. That's what we see. So Andreessen,
and then later on they got into an argument. They got into an argument in homeroom, and then yelled at each other.
And then Dorsey's posting this screenshot, tweeting, "I'm officially banned from Web3." So this is continuing on this little spat between Jack and the, I guess, prominent Web3 supporters. But Dorsey has also gone on a following spree, adding several Bitcoin maximalists and open source software contributors. What are your thoughts on that, Lawrence?
I mean, I guess the guy who created the platform that allowed people to bully and abuse other people and change the political discourse throughout the world to the point where it's just short sound bites and insults and uninformed opinions. I guess he has very strong opinions in this case about Web3.
Right.
But whatever, dude. Like,
let's check out our CoinDesk Spotlight.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Well, 2021 was an incredible year for crypto. Bitcoin hit an all-time high of at $69,000. The most expensive NFT was sold by Christie's for $69 million, and we're still in early days. What will 2022 hold? Joining us now with a couple of predictions is Graham Jenkin, CEO of token sale platform Coinless. Hello there, Graham. Thanks for joining us. So Coinless has come out with a survey of top crypto predictions for 2022. So let's start off with the top prediction for Bitcoin price, and also tell us how you conducted this survey.
Hey guys, thanks for having me on. Good to be back. So we reached out to our community. Around about 4,000 folks responded to us. Our community's, I'd say it's a pretty smart community. These are folks that have participated in token sales at an early stage. They've got sort of the guts and the foresight to identify high quality pre-launch tokens. So they've probably got some insight into what may be coming down the path. And so yeah, that's basically how we did it. We do this every year. Alex Tops from our team ran the survey, and yeah, happy to jump in to any points we want to dig into.
Well, the first one we see here is the price of Bitcoin, and it sounds like a lot of folks believe it'll be over $100,000 within the year.
Within the year, well, we were all thinking it was going to happen by December, right?
This year.
2021.
Right. Got a week.
So
you got a week left.
Yeah, there's plenty of time.
Yeah, you have a week left.
We'll get there. Yeah, I think once we wake up from our Festivus hangover, I think we'll shoot straight to 100,000. So, but yeah, numbers go up, numbers go down, and Bitcoin continues to roll on, and innovation continues to happen in the space. So, that's what we're excited about going into 2022.
What do you think is driving their bullish optimism?
Well, I mean, it's just so much development going on in the space, so much capital moving into the space, a lot of new projects out there pushing the boundaries of what this technology can do, more adoption happening. One of the key findings was around gaming, and how gaming ends up being a vertical that a lot of people in our community at least are excited about. A lot of development happening in that space. And so, with all the capital flowing in, developers flowing in, projects launching, applications being developed, greater and greater adoption, it's hard to not be bullish.
Mm-hmm. Another point there was, will another central bank or country follow El Salvador's example? And they have made Bitcoin legal tender. They're creating a Bitcoin city. They have volcano nodes. So you had an overwhelming majority say that, yes, another country or central bank will follow El Salvador's model in 2022. Any indication of, what country might do that? What central bank might do that?
Well, it's hard to imagine the U.S. Congress or central bank dropping everything to follow El Salvador's leadership. But, I think what's great about what El Salvador is doing is that, they essentially have the same mission that many of us do in this industry, which is to try to accelerate the advancement of this technology. So that's great. And building all the infrastructure that they're building is fantastic. I think it's going to be a great utility for their community, for their country. But actually, what we're more excited about isn't so much what's happening in a central government context or a large nation state context, but more from a bottoms up standpoint at the governmental level. Projects like CityCoin, led by the Stacks team, where you've got Miami adopting its Miami coin and generating revenues for the Miami government. I think what we're excited about is more kind of local government participation in these kind of events and activities. And I think eventually what you'll see happening is that those local governments, that network of local municipalities, will start to see the revenues that are being generated from participating in crypto. And get excited about that. And I think it's a great bottoms up way of getting governments engaged, and probably a more crypto native way of getting governments engaged in this ecosystem. So we're excited about that.
So one thing I noticed, you had Solana and Binance Smart Chain are two layer ones that your survey participants thought would approach the value of Ethereum by the end of 2022, or at least have the best odds of it. How realistic is that? Look, Ethereum's pretty valuable right now. And of course, these are two layer ones that have a lot of, let's say, enthusiasm for it, but really up to as much as Ethereum? Is that realistic, or is that just getting closer in terms of valuation to Ethereum, but not near it?
I know. It took Ethereum years to get to where it is today.
Anything is possible in crypto. But, I think it's probably no surprise that Solana in particular got mentioned, just given that, Coinless ran the Solana auction in early 2020. And so we've got quite a few happy Solana token holders on the platform. So, there's no wonder why they're kind of hoping it gets to the same level as Ethereum. I think part of the challenge there is that I think the question may have been asked a little bit incorrectly. There's definitely a lot of activity happening on other L1s. whether it's Solana, Binance Smart Chain, Avalanche, Algorand, etc. The other thing that we're seeing is a lot of activity happening on L2s from an Ethereum standpoint. I mean, there's obviously so much developer momentum on Ethereum, but moving to L2s, I think we're going to see. We've already seen a lot of that in 2021, and a lot more activity there going into 2022.
So what's getting the investors excited in general? Like if you were to step back, you have the survey, you ask them a bunch of questions, but you step back and you look at it, you say 2022 is coming around the corner here. What's getting them all their attention? Where would you say it's really going, and where's the excitement here?
Yeah, good question, Lawrence. There's two big areas. I think one is around gaming. Gaming, I think, ends up representing a couple of different things to our community. One is that there's the gaming ecosystems that are developing. It's not just purely about games being developed, but these teams, whether it's Immutable with Immutable X or Sky Mavis with Ronin, they're not just building games like Axie or Gods Unchained, but they're building these gaming ecosystems that are kind of like Valve Corporation, Steam, with its kind of marketplace and community and everything else. But really what these teams are building is Steam on steroids, where there's the financial dimension, there's the wallet, there's the economy, there's efficiencies from a roll-up and L2 standpoint. And so so much development's going on in that space. And actually another great thing about gaming is that the game developers are really solving a lot of the UX challenges that we've had across crypto in general. You have to have good UX in order for games to be successful. So I think we're really excited about that. And then the other thing we're excited about is what's happening from a cross-chain interoperability standpoint. We're seeing a lot of projects focused on whether they're building on IBC or they're L2s that are running transactions on the L2 but then settling on L1 from an Ethereum standpoint. There's lots of interchain activity going on and more infrastructure around that. So excited about seeing that develop in 2022.
Yeah, I see some of the top projects that folks are most interested in seeing on CoinList were gaming, DeFi, NFTs. NFTs have been particularly big this year. And I wonder, what do people see? What do you see in store for NFTs next year?
I wish I knew. I mean, it's a bizarre and interesting space. And I'm not necessarily the expert there, but what we see going on with NFTs that's really exciting is the construction of communities around NFT offerings, and where the NFT represents yeah, exactly. I mean, it's like a key into a community, right? It's a representation of your identity, and your identity is associated with the community, and within that community you've got access to unique conversation and the ability to run projects, whether it's in the context of a DAO or some other grouping, access to alpha. And so, NFTs, it's a little bit less about just purely the asset that's associated with that NFT, but it's that access to that broader community that I think we're going to see more focus on in 2022. I mean, it's already happening.
All right. So as people focus onto metaverses, gaming, and Web3, what will happen to Web2?
Yeah, great question. I don't know. I mean, I think it's hard to see the Googles and Facebooks of the world disappear, or the Alphabets and Metas of the world disappear. But yeah, I mean, I think more and more of those companies are going to be moving into the space. They're going to be trying to understand what their strategy is with respect to Web3, putting investments there. There's already lots of development going on within some of those companies in terms of how do we take advantage of these new technologies, newer technologies? And so we'll start to see some transition there, I think. But yeah, we're a long way away from seeing Web 2 disappear and Web 3, whether Jack likes it or not, becoming superior.
Poor Jack.
Poor Jack. I know if it's poor Jack. I mean, I think the interesting thing about what Jack's saying is that I definitely understand where he's coming from with respect to this idea that Web3 is just enriching VCs. But I think there's also the aspect of founders are making these decisions to go to those VCs to raise that capital. And what I'd say to those founders is that there's a lot of pressure on those founders to go to the name VCs to raise capital. But there's definitely lots of other ways to raise money without necessarily getting that signal.
Speaking of which,
yeah.
Speaking of which, you raised some money, right?
This is correct.
You guys raised about 100 million. Congrats! Yeah,
that's right. Yeah,
valuation of $1.5 billion.
Yeah, so we did that, initially with some of our existing investors, and then we started to, and Jack probably wouldn't be happy about this. We started to reach out to the kind of name VCs and crypto VCs, and then we realized, what, we've got a large community of investors on our platform. We're growing in Eastern Europe and Asia, and we need help in those regions to understand what our strategy should be there. And so we ended up building this large community of investors that participated in the second tranche of our round. And so it looks a little bit more like distributed fundraise, so we took a little bit of a different approach.
Hope you don't get blocked.
That's interesting. Yeah,
hope I don't get blocked. Don't get blocked. Yeah. Well, Jack's an investor, so
oh, okay. Well,
hopefully he doesn't block me.
He likes decentralized raising. All right, Graham. Thanks for your time. Congratulations on the raise, and thanks for your latest predictions on 2022. That was Coinless CEO Graham Jenkin. All right, coming up, crypto markets update with venture capital firm Youbi Capital.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, let's check in on what Bitcoin trading at $48,571, slightly down about 0.4% over the past 24 hours. The CoinDesk Ether Price ETX index is just under $4,000 now, trading at 39.54, down about 0.3%. The DFX CoinDesk's DeFi index is at 466 points, soaring almost 60% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Joining us now to discuss the crypto markets is Chen Li, CEO of VC firm Youbi Capital in New York. Hello there, Chen. Thanks for joining us. So I'd like to hear your crypto markets outlook. Things are pretty mixed in the crypto markets right now.
Yeah, so I think it's still under the headwind of the tapering and tax rates. I think, but we already saw that the market, especially individual tokens, has started to rebound after the announcement by Fed, which market believe is already priced in. So we already saw some individual assets pulling back against the gravity. But I think from the VC point of view, we are very focused on the fundamentals. I think the individual asset like Avalanche, Luna, they are really showing great growth, and especially in this period of contraction of liquidity, I think we are going to see the liquidity, retreating to the kind of the mainstream individual assets that have great fundamentals.
So we're seeing correlations kind of low right now, at least when it comes to U.S. equities and Bitcoin. It's about 0.26 the coefficient on a 90-day basis. So, and it's actually even lower against gold. So crypto seems fairly uncorrelated with some of these other macro assets for the time being. Do you think we're going to see an increase in that correlation, or do you think it will continue to kind of act on its own, based on its own fundamentals that have nothing to do with the macroeconomic situation?
Yeah, it's really hard to predict. We have seen very close correlation between Bitcoin and risk asset in the last 18 or 24 months. There is that has always been a positive correlation since the pandemic started. So it's really hard to see. I think there are people on the borderline thinking that Bitcoin is going to be a hedge asset against inflation, but some people just believe there is correlation still. So I think we are going to see in the next maybe 6 months when the interest rates start to rise and risk asset maybe going down a little bit, we're going to see if Bitcoin can hold up to the gravity.
So simultaneously, though, we're seeing that amongst themselves, there's still such a high correlation with, let's say, Bitcoin and ETH and Ethereum, Ether, and with other tokens. Do you think that's ever going to break? Do you think that's going to break this coming year? And if so, which ones do you think will sort of break away from its such close ties to, say, Bitcoin and ETH?
Yeah, that's a great question, Lawrence. Actually, we are very long, even though we are from a Bitcoin miners background, but we have turned more bullish on Ethereum against Bitcoin in the last 18 months. So I think since probably last year, Ethereum has went up 200% against Bitcoin, and other assets also outperform Bitcoin quite a bit, such as BNB, Luna, Avalanche, Polygon. So we have seen a lot of adoption of these tokens, a lot of usage. I think the correlation is between crypto assets are breaking down. I think one maybe contributing factor is that in centralized and DAXs, we are seeing more volumes in the stablecoin pairs instead of the BTC or Ethereum pairs. The trading volume is just went down a lot, and because of the asset are the alternative tokens are traded against stablecoin, the correlation between Ethereum and Bitcoin just went down.
Wouldn't that though cause
All right, so you've mentioned some of the tokens that you're particularly big on, which is Avalanche, Polygon, Luna. Can you tell us a bit about why?
So we just saw the news that Uniswap v3 went live on Polygon. So it was announced several days ago, and the Polygon price has performed really well. I think Polygons aim to be the aggregator of different scaling solutions, including sidechains, layer 2s, and ZK rollups. So I think the Uniswap launch on Polygon is just a recognition of the all these Ethereum native applications of its solution. So in the Polygon's case, I think we are very bullish on its acquisition of Hermes and Mir, which become the Polygon Zero. I think they're going to provide a lot of scaling to the Polygon sidechain, so as an aggregator of different scaling solutions for EVM. And Avalanche, I think it has shown the fattest growth of community, not only in terms of active users, but also the development activities. So we saw that their smart contract deployed from unique addresses just reached all-time high yesterday. And last week they also launched the subnet solution that allow developers to launch their own EVM compatible blockchain, which is similar to a sharding kind of approach that adds another kind of dimension to scale for the developers. For Luna, I think it's just the amount of liquidity and the way that they attract mainstream users to their platform.
I just wanted to get back real quick on this thesis that if you have the trading pairs versus trading against stablecoins, that you would see higher correlation. Wouldn't you go in the opposite direction, though? In other words, if you're using Bitcoin to buy an altcoin, you would see them move in opposite directions because you're selling Bitcoin, buying the alt, and wouldn't that actually break down the correlation, or do you or is it that the stablecoins trading against stablecoin just makes it so different that that one has nothing to do with the other? I mean, what do you think is going to be the overwhelming factor?
Yeah, I think that's a great point, Lawrence. But what we usually see is that the trading does not always happen. So if trading happens, if people are turning Bitcoin into another altcoin, another asset, for sure that the correlation between those two pairs are going to go down. But in a lot of cases, we actually don't see trading happen. But what we see is that when Bitcoin moves in one direction, all the other assets, they just move with it. It's like being pulling down by gravity or being blown back because there is a resistance. So in a lot of cases, the assets, they are priced without trading happen. So that's why when most of the volume happens within the crypto to crypto pair, there is greater correlation. But when it happens with the stablecoin, there's going to be less correlation.
It's very interesting.
I want to ask you, Chen, about China, because your firm acts as bridge between China and the US. But China recently, this year, has been cracking down on crypto again and again and again, as they have for years. But I wonder, especially hard this year. So I wonder, looking ahead in 2022, how do you see the crypto markets in China?
Yeah, it's a tricky question. So in China, they had taken steps, I think, since 2013, 2014 actually. The first step was to cut off all the kind of the traditional payment rails. You cannot connect your bank account to the exchanges. And then in 2017, the famous September 4th event, they basically closed all the exchanges that had local operations. And then this year, they banned pretty much mining and all these teams that are developing projects with tokens. So I mean, the ban has become more and more strict. So a lot of projects that we invested that are still in China, they are feeling a lot of pressure. But I think on the upside, that we have seen a lot of great teams that had Web2 experience. So we know that China is not known for its innovation in fintech. The restriction has been tight always, but China has developed a lot of great product in social media and like TikTok and games. There has been a lot of mobile games. So we are seeing a lot of these traditional developers joining crypto because of the bullish market. So we are seeing actually some of the teams, either they are just keeping a low profile in China or they move to Southeast Asia, Singapore, Malaysia, Philippines. So they typically move their marketing operation team there, but the development team remains in China to kind of reduce the operational cost. But they can still do marketing without being kind of knocked on the door by the regulations.
Interesting. Finally, before we wrap, we've been talking a lot about Jack Dorsey and his poo-pooing on Web3 and VCs. And so as a VC who heavily invests in Web3, I wonder if you have any reaction or comments on that.
Yeah, sure. I think it's a very interesting situation. I think he has some credit to his kind of words. Definitely, I think the distribution of tokens has been narrower compared to the ICO era, when we have a lot of individuals holding a sizable amount of stakes. But now I think institutional investors and the teams, insiders, controls majority. But I think we also feel that it is necessary to get a VC involved. To our own experience, we incubate some project and we work with them very closely for a long period of time, like 6 months, 12 months, and we spend 10, 20 hours a week with them. So I think only when VCs get a larger stake in those projects, that would worth the time and effort that we invest in these projects. So we know that a lot of VCs that take this approach to work with project closely, not only the marketing tokenomics, but even really pull up their sleeves to really do a lot of development work to contribute cryptographists or developers to really kind of help the project.
The criticism he's trying to outline is that he doesn't want the old bosses to be the new bosses, the old traditional system to be continuing in the new system, and that he wants things to be more decentralized.
Yeah, I think eventually, I think things will be more decentralized when I think a lot of VCs, they're LPs, they have LPs, and they are distributing in kind. So I think the tokens will be in hands of individuals instead of very concentrated in the VC's hand.
All right, Chen. Thank you for your insights. Appreciate your time. We got to end it there, but that was Youbi Capital CEO Chen Li. Time now to check in with Crypto Twitter for our tweet of the day. And this one is from Jack Dorsey's blocklet Copa, commenting on their case against Craig Wright in the UK about copyright on Bitcoin, the white paper, tweeting, Copa just won its first hearing against Craig Wright with a link to the court document. Interesting read. Why did he try to get the court to block that evidence, though? This judgment appears to be a procedural step about excluding certain evidence, but something to watch out for as the Craig Wright lawsuits wage on. All right, that's it for First Mover. Thank you, Lawrence Leviton. I'm your host, Christine Lee, and I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.